Hey guys, Tex here. Today I want to talk about level 2, what it is, and do you really need it to trade? I get asked both of these questions quite often, so I thought I would make a video addressing these. Actually starting with the second question, do you really need level 2 to trade? Technically, no, you don't have to have level 2 to trade. You can certainly trade just from a chart. And I think as a beginning trader, the most important thing that you need to understand and learn is technical analysis from a chart, plotting out support and resistance levels, and understanding where a stock is most likely to go based on chart patterns and what the chart is telling you. But level 2 can give you a lot of information that can be useful. You just have to understand that there are pluses and minuses to using level 2. So I don't actually use level 2 exclusively to make a decision, but I will use it as sort of a piece of the puzzle, right? And when it comes to validating a trade idea or a particular level. And I'll explain all of that as we go along here. So in the most basic of terms, level 2 is essentially market depth. And what I mean is you're actually getting to see the depth of the market. Okay, you're actually seeing at what levels are both buyers and sellers sitting in the market with orders waiting to get filled. All right, so when we look at a level 2 window, across here on the left side, this is the bid, and on the right side, this is the ask or the offer. So on the bid, this is people who want to buy shares of this stock. That could include investors, traders who want to go long a stock hoping that it goes up in value. It can also include short sellers who are holding shares short on a stock hoping that it goes down in price, and then they would then buy their shares back at a lower price. So sitting on the bid is going to include a combination of people, investors, traders going long, and short sellers who are actually trying to cover their position. On the ask, it's going to include investors and traders who are trying to sell their shares, hopefully at a higher price, and also short sellers who are looking to borrow shares from their broker in order to short a stock, betting that it's going to go down in price, and then they would then buy back those shares at a lower price and profit from the difference. So when we're actually looking at level 2, the very top here, this is the top of the market. Okay, if you don't have access to level 2, chances are you will have access to level 1. And what level 1 is it's only showing you the top of the market. It's showing you the best bid and best price, the best bid and the best ask price. So level 1 right now on this is an ETF, but level 1 on this ticker here would actually be showing you $9.23 for the bid and $9.27 for the ask. Most level 2 windows will include level 1 up here at the top, but I've actually modified mine here on Lightspeed Trading to not show me the bid and the ask up here, because I don't really need to see level 1 up here because I have access to the full market depth here, obviously. So I've included things like the previous close, today's open, the last price, and so on. So this information for me is more useful up here than having the bid and the ask sitting up here. So if you didn't have access to level 2, you would at least have level 1 most likely with pretty much every trading platform. And with that information, it gives you the most important piece of the puzzle, which is where people are sitting at the top of the bid and the top of the ask. And from that, you can also figure out what the spread is. The spread is shown right here as 4 cents right now, and that's just simply the price difference between what people are sitting at on the bid and what people are sitting at on the ask. So it's the difference in price between what people are willing to buy the shares for and what people are willing to sell the shares for. Generally speaking, the higher price the stock is, the more the spread is going to be. So for example, if we go look at Amazon, you can see the spread's usually around a point at least. Okay, so these higher price stocks, they move a lot more, right? So a $1 move on Amazon is nothing, right? That's like 10 cents on a penny stock. So the spreads are going to be wider on the higher price stocks for sure, but generally you're taking much smaller size positions. So the spread is not, it kind of balances out, if you will. But the important thing to understand is that all the spread is the difference in the price between what people are asking to, what people are wanting to buy the shares for and what people are asking to sell their shares for. All right. So the things that we're looking at here, beginning with the bid side, this is the market that they're using to execute their orders. You don't really have to worry too much about that. That's just giving you general information about what market the orders are being placed through. The most important things to look at is the price levels and the shares. So here you see there's a whole bunch of people who want to buy shares at $9.25, okay? And over here we see how many shares they want to buy. Now you have to add 2 zeros on to what you're seeing here. So this 14 is actually 1,400 shares. This 2 is actually 200 shares. This 1 is actually 100 shares. But the thing about a 1 is it could actually be less than 100 shares because it only goes, the minimum number it's going to show is a 1. So if someone were sitting here, if this order right here is actually only to buy 25 shares, it would just show a 1 here. Okay, so what we're seeing here is the price levels that people want to buy at and how many shares they want to buy. And this is actually useful because you can see, like I said, the depth of the market. You can see what's the lowest that someone's sitting on the bid at is 645. So if all of these orders here at 925 get filled, we're going to go down to 922. If that gets filled, we're going to go down to 921. If that gets filled, we're going to go down to 687. That's assuming there's still sellers willing to sell at those prices, right? So, that's not to say that we would go all the way to 645. I'm sure more buyers would actually put orders out before we got to 645, but that's just what you're seeing here on the market. These are active orders that are sitting here waiting to get filled for people to buy shares. All right. So the same goes for the sell side, right? If we're looking at the sell side, we still have the market over here, and then we have the price and the share size that people want to sell for. So right here at the top, we see that there's someone who wants to sell 200 shares at $9.27. Here's 300 shares at $9.28, and so on. And what we can discern from that is where is there a level that there seems to be a lot of buyers or sellers? Well, this is a perfect example. You can see that there is a lot of buyers sitting right here at $9.25 at the moment. Okay, so that's essentially telling me this is what's known as a wall of buyers. Okay, so there's so many buyers sitting here at this price level that in order for the stock to break this price level and go lower, there would have to be enough sellers willing to sell all their shares to fill all of these buyers here. Okay, so if there's not enough sellers to fill all of these orders, then this price level here is probably going to hold, right? That means that there's more buyers than there is sellers. So there's more people interested in buying this stock right now than there is selling it. So the chances are it's probably going to hold, but that isn't always necessarily the case. Okay, there's a couple of things to consider here. Now, if I were to look at the chart and I saw that there was in fact a level at $9.25 that was solid support, and then I looked at level 2 and I saw this wall of buyers sitting right on that support level, that would give me the confidence that that support level is validated and obviously being respected, because there's a lot of people who see that support level and want to buy at support. You buy at support, short at resistance, or sell at resistance, right? So this is helping me understand that that support level is validated. There's a lot of buyers who want to get in at that level. But the thing is that level 2 can actually be manipulated. And there's a couple of ways. You can put an order out there and you can essentially hide how many shares you want to buy. So for example, this guy right here at $9.25, it looks like he just wants to buy 100 shares. Well, it could be less than 100 shares, which is not really a big deal to us, but it could also be more than 100 shares. Let's say, for example, that he actually wants to buy 1,000 shares, but he only wants us to see 100. Well, it's perfectly legal and acceptable to hide your order. So this guy sitting here, he could be wanting to buy 1,000 shares, but he could be hiding the size of his order, so it would only show as 100 shares. And so because of that, it can be manipulated. So you can't always trust 100% what you're seeing here on this share size here, because people can hide their orders. There's another way that level 2 can be manipulated, which is actually illegal, and that would be for someone to essentially flash a big order up here on level 2 to make it look like they want to buy shares. So let's say that this guy sitting here he's sitting here at $9.25 and he's showing he wants to buy 1,400 shares. let's say that he actually doesn't want to get filled. He's just putting this order up here to kind of prop the stock up and make it look strong, right? And if he starts to get filled on that order, he might pull it down right quick because he didn't really want to get filled. He just wanted to make it look like the stock was strong. That's actually illegal. You're not allowed to do that. But unfortunately, people do that. So you have to take that into consideration, that you can't trust everything you're seeing here on level 2, but you can use it as a guide, right? You can just use it as a guide to see how deep is the market with both buyers and sellers. The only real thing that you can't manipulate and that is true real time is the time and sales, also known as the tape. And this is simply the orders that are executed come across this tape. They get printed out with the newest order up here at the top. So you can see that an order was just executed at $9.25 for 100 shares. So they can't hide the size of their order here on the time and sales. If you see a 1 here, it could be 100 shares or it could be a little less simply because it doesn't go any lower than 1. But here you see 200 shares at $9.23. That was actually 200 shares that went through at $9.23. It's not like they can hide it over here, right? If there was a buyer sitting here showing a 1, and he was actually hiding a much bigger order. Let's say he was sitting here wanting to buy 1,000 shares, but you only saw a 1, so you think he's only wanting to buy 100 shares. But you see all of a sudden a whole bunch of prints go through, like 1, 1, 1, 1, 1. So you see like 800 shares that just went through at that bid price right here, and that guy's still sitting there on the bid. Then that's what's known as a hidden buyer. It works the same way as a seller. If you see someone sitting on the sell side and you only see like a 1 here, for example, but all of a sudden you see a whole bunch of orders go through where people hit the ask, and there's more shares that went through on the time and sales than what he's actually showing here, and he's still sitting there, then that means he's a hidden seller. So he's actually trying to sell more shares than what he's actually showing here. And people might actually do that. They'll hide their orders because they're trying to get out of their position for the best price possible. But let's say this guy, let's say there's a guy who wants to sell 10,000 shares or something, right? If he puts an order up here on the ask for 10,000 shares, there is no one over here on the bid that's going to want to stay on the bid, probably, because that's going to take a lot of orders to break through that, right? In other words, you're going to have at least you're going to have enough buyers to buy up his 10,000 shares, and then more buyers after that for the price to even go up, right? So a lot of times sellers will hide the size of their orders because they don't want you to see how many shares they're actually trying to unload. If they flash a whole bunch of shares up here, then the chances are there's a lot of buyers who are going to realize that's going to be tough to break through that level. He's going to have to get his order completely filled before the stock price could ever go any higher. And that's one way that people will illegally manipulate level 2. Short sellers, for example, will flash really big orders up here on the ask to make it look like the stock's really weak, to basically discourage people from trying to buy shares of the stock and try to drive the stock price down. And that's illegal. You're not supposed to do that. But you just have to understand that people will do that. And so you can't always trust 100% what you're seeing here on level 2, but you can use it to help guide you in your analysis. More specifically, if you've done technical analysis by marking out levels on a chart, and you can basically correlate what you're seeing here in level 2 with levels you're seeing on the chart, you can certainly use that to your advantage. The most important thing, though, is the time and sales, because that's what actually occurred. Okay, that's the actual orders that go through. So with that information, how do I actually use level 2? So level 2, it's debatable on really fluid stocks like Apple, and especially like the SPY, which is the ETF for the S&P 500. It's so liquid and there's so much going on that the level 2 changes. It's just, you can't even hardly keep up with it, especially in high volatility with a lot of high volume. So as you can see, it's moving very, very fast, and it's almost impossible to read level 2. So, you can debate that there's not a lot of value to using level 2 in something like the SPY. I mean, I will glance at it, but I look at time and sales in this case, with a very highly liquid stock that's very volatile, a lot of volume going through at the time and sales is a better indicator than level 2. But you can still kind of get, a kind of a gauge of the market depth by glancing at it, right? But going back to something that's not moving so much, what I will use level 2 for is, like I said, to validate a particular level that I might have marked up on a chart. Okay, I want to see, are there buyers showing up at that level to further validate that that's a support level that people are respecting, and most likely the stock will hold that support level. That will help give me another piece of the puzzle as to whether I actually want to take a trade. Or let's say that I'm actually long a stock and it's going up in price, but as it reaches a level of resistance, I start to notice a lot of people showing up over here on the ask. So let's say in this instance, instead of seeing this, basically this wall of buyers, let's say that this was over here on the ask as the stock price went up, and I see this, a big wall of sellers pop up over here on the ask at a particular price level. That could be telling me that the stock is going to struggle to break through that level, because there's so many people who want to sell their shares at that level that all of their orders would have to be filled, and there would still have to be more buyers willing to still buy after all those orders get filled before the stock price would be able to break through that level and go even higher. So if I see a whole bunch of people pop up on the ask and I'm long a stock, all of a sudden I might start thinking about taking a little bit off, because I realize that it's going to be difficult to break through that wall of sellers. We're going to have more buyers step in to fill all those orders and continue buying. So you can kind of use level 2 in that way to help you decide when you might want to start looking at taking profit. But I wouldn't use level 2 on its own, like I said. If I know that the stock is coming into a resistance level and I've been long the stock, I'm already going to be thinking about taking profit there anyways, because it's a resistance level. But if that resistance level is further validated by what I'm seeing on level 2, then I'm even more likely to definitely take profit there, okay? So you can kind of use that to help you validate what you're seeing on the chart. But really, when it comes down to it, what you're seeing on the chart is going to be the most important thing. So that's why I say you don't have to have level 2. You can trade off the chart fully expecting that a key support or a key resistance level is either going to hold a stock up or hold a stock down. Okay, so it just helps you in the sense that you can kind of use it as another piece of the puzzle, like I explained. Another way that I'll use it is if I'm playing my counter trend long strategies, and I do have a video of that where I was trading Square. So Square was selling off, very fast, very hard, and was basically due for somewhat of a retrace. It just got ahead of itself and got very extended. You can go check out my channel and see that video where I'm actually trading it live. So the first thing that I did is I looked at the chart and I said, okay, it looks like there's a support at, I forgot what price level it was at, but I looked at the chart and figured out where a support level was probably going to come in. And as Square was continuing to sell off toward that support level that I had found on the chart, I watched level 2 and, more importantly, time and sales. I wanted to see, as Square approached and touched that support level, if a whole bunch of orders were going to come through from mostly just from shorts covering their position, because when a stock sells off real fast and hard, you've got longs who are panicking and selling their position, and you've got shorts who are piling in trying to profit on the way down. But as a stock comes down to a key support level, short sellers are going to start covering their position because they know that it's a support level where people are most likely to want to buy the stock. And so what ends up happening is you'll get a retrace. As you can see here, here's kind of an example. If you have a sell-off that comes down to a support level, you're going to have short sellers who are going to start covering their position. People who want to buy the stock are going to start buying it there, and then you end up getting a retrace. And essentially that trade that I'm talking about on Square, that's exactly what I was looking for. It was an extended sell-off down to a support level. I found on the chart. I watched level 2 and time and sales as it came down to that support level. What I wanted to see was a whole bunch of green prints going through. Basically, that is people hitting the ask. That's people buying shares at whatever people are asking to sell it for. And a lot of times that will be just from shorts, just trying to cover their positions immediately. And that's kind of telling me that that support level is being respected and most likely going to bounce there. So by using level 2 and more importantly time and sales for a trade like that, I'm able to actually get a sense of not only what I saw on the chart, but what I'm seeing in real time coming through on time and sales that gives me the conviction to go ahead and take the trade. So that type of trading is not for everyone. It's very fast-paced, really kind of scalp trading. And in that instance, I would say that you probably do need level 2, but as a beginning trader, you should not be trying to trade like that. So like I said, technically, no, you don't have to have level 2, but does it have value? Yes, it definitely has value. You need to understand what you're looking at and how it works, but you also need to understand that it can be manipulated and you can't completely trust everything that you're seeing on level 2, and that it's going to be more valuable for some stocks than others. For example, like I showed you on the SPY, the ETF for the S&P 500, the level 2, the market depth is going to be a lot less valuable to you than, say, on a much lower volume stock that doesn't move around as much. It's just going to vary, but it still has value in, in some sense. So hopefully this video was helpful. I tried to explain it as simply as possible. Let me know in the comments below if I did a good job, if you guys have any questions or anything, and I'll certainly address those. If you like the video, please consider hitting the thumbs up button and subscribing to the channel for more educational content like this in the future. So with that said, guys, I hope you are doing good. I appreciate you watching as usual, and look forward to seeing you in the next video. Take care.